When do I expect to see the Moass and why? That's what we're going to talk about here in this video. If you guys remember, I've been talking about an end of summer, potentially the first couple weeks of fall, as being a period in time in which you could be very prone to see the Moass. And we're going to talk about exactly why that is. Do I still think that is the case? And everything else you guys might be curious about. So we are going to get into it. Hit that like button and subscribe to the channel. Thank you guys for doing that. If you want to come trade with me live in real time, link down below in the description. Other than that, let's get straight to it. So AMC stock today sitting at $14.92 per share. Now, in the short term, it looks like we have a lot of bullish positioning from hedge funds and money managers. A lot of them are buying these calls that are out of the money, and we are having an overwhelmingly high bullish positive value, right? The positive value has been very, very high. Today is 95%, 10 orders totaling $526,000, and you're starting to see a lot of these very far out the money options being purchased by these hedge funds. Take a look at this order that just came in about an hour ago, a January 20th, 2023, 145 call for about $22,000. You're seeing a $10 call, a $14 call. Both of these orders over $110,000 a piece. And as you guys do know, we've seen a lot of bullish activity on Friday, a $1.3 million order for January 20th, 2023 for the $25 call. A lot of out of the money options have been bought on AMC as of the last couple of trading days. So in the short term, that looks very good. But what is different about the end of summer, the beginning of fall for the markets to see the Moass? Well, I think personally, there's a couple ways you can look at this. You could be in the camp of, if the stock market just rips up, if the Fed U-turns, then AMC stock is probably going to see an even bigger rally, which would be the case. AMC would rally more than the broad stock market. I would put my money on that. I don't think that would be a Moass-like event. I don't think you would see a lot of shorts covering. You would see some, and that would help bring the price up, but you wouldn't see a lot of shorts covering. Now, I'm really in the camp that if the stock market continues to fall and AMC continues to do well, then that is going to push a lot of pressure on hedge funds portfolios, and that is going to essentially force shorts to cover sooner rather than later. And if we look at the FINRA margin debt, it's still very high and really has not come down all too much in the grand scope of things. As of June 2022, these numbers just came out, $683 billion worth of margin debt. Take us back to the March of 2020 lows. You were sitting at $479 billion of margin debt, whereas we're almost approaching the peak that we've seen before COVID on the S&P 500. If you pull this up to the daily candlestick chart, the peak before COVID was around 3,300 on the S&P 500, about 330 on the SPY ETF that tracks the S&P 500. So what has actually been happening here? Portfolios have been dropping and margin debt has not been dropping as much. And actually over this last month, you have seen the biggest drop to margin debt. Up until May, nobody was really covering on that margin debt. So even that in and of itself kind of leads me to believe that hedge funds have lost a lot of money, and they're starting to realize a lot of those losses and just reduce their margin debt because they probably don't have a choice. They probably don't have a choice to reduce their margin debt. Their algorithms or whatever does their risk management is probably forcing them to, because after all, look at Tiger Global down 50%. Look at all of these other hedge funds that are either going out of business or that are close to going out of business, down 30, 40, 50%. There's no lack of those kind of headlines, news headlines throughout 2022. We have all seen them. So when your portfolio values go down and your short positions go down, well, that kind of starts to offset some of that portfolio loss. But if your short positions start to go against you because, let's say, AMC has good news, they offer some kind of dividend, like what we covered over the last couple of weeks, what Adam Aaron said. They said AMC is going to pounce. And they said on the earnings call Q3 that only when the timing is right, essentially, are they going to expose all of the shorts and really, try to get a short squeeze. That's the long story short of what Adam Aaron was indicating for August 4th. That is AMC earnings. So I think definitely the narrative changes as a business like AMC is fundamentally getting better as the markets are getting worse, but I think it's really only, one big thing away from seeing a really big pop-off kind of event, and that event itself would snowball into shorts covering one after the other. The smaller guys first, the mid guys, and then the large guys. Those are going to be the hedge funds, the money managers that really move the stock up or down $5-10 between halts, because don't be confused, we will see trading halts when it comes to the Moass. But even here over the next couple of weeks, it looks like hedge funds are positioning, like I said, for a bullish rally. What we seen on Friday was 12 orders totaling $2.32 million, positive order value of 95%. So it's no surprise hedge funds not really being too super secretive about it. As far as the short interest, that is sitting at 18.43%, up about 2.77% over the past 7 days. Short interest dollar value sitting at $1.47 billion. Free flow out on loan, 26.64%. Shares out on loan, 137.33 million. Days to cover, 3.27. Cost to borrow of 9.97. 100% share utilization. The cost to borrow average sitting at 9.84%. Cost to borrow max at 10.18%, cost to borrow minimum at 8.27%. So it looks like cost to borrow rates are definitely going to be hurting on top of just portfolio values dropping, and potentially when AMC starts to rally, those being like a two-sided effect where you're just losing on everything. The cost to borrow rates in the meantime are going to have an effect on the decision making that hedge funds have to make. If you got to pay out 10% and now AMC looks to be really bad on a risk to reward basis, it looks like you might lose a lot more money staying in your short position than you thought. It definitely helps to be an added factor to get shorts out of their positions, especially if the cost to borrow continues to go higher, which I do think we will trend higher. So that's pretty much it. That's the full thesis. It doesn't have to get more complex than that. There's either one side or the other that you want to sit on. Either we get a market bounce and a bottom, which I think will happen before the end of summer. Potentially at the very latest, that September meeting, September 21st, I think the Fed will indicate that they're going to slow down rates, as they would be pushing the federal funds rate into restrictive territory around September. And that could give you a market bottom. That could give AMC a parabolic rally, or, the end of July this week. And the next couple of weeks are going to be pretty bad, potentially around when we get earnings, or even a couple weeks after that. That's when you could see a bigger bullish event for AMC stock, and the markets would probably still be down in the gutter. Also, I think a lot of people forget about the popularity behind AMC stock. AMC is one of one in the sense there's never been another stock that has been known for a possible short squeeze for such an extended period of time that literally everyone knows about, from Warren Buffett to your retail investor. Everyone in between that spectrum knows about AMC, knows about the potential. So that is more eyeballs. That is more potential buying power that will head into AMC stock. Fun fact, why do you guys think you see so many commercials for McDonald's or for other things? It's not because those companies expect you to see McDonald's on the TV and want to go out and run to the store and get some McDonald's. That's not what it is. It's brand awareness. And AMC has the most brand awareness ever. So next time you're thinking about where to get food, McDonald's is on your list because it's something you think about, whereas something like Dairy Queen or something else is not really necessarily in your mind, or a Sonic is not really in your mind, or A&W, not in your mind as much. Don't do as much advertisement, not as much brand awareness, right? AMC has that going for it, and that is very, very powerful. So I think either way, whichever side of the boat you were on, whatever side of the chopping block you were on, I still think the end of summer, potentially the first couple of weeks of fall, is going to be that time period where you can expect to see a big increase in AMC's share price. So let me know what you guys think about this down below in the comment section. Which side of the boat do you think on? Do you think it's the bearishness that causes AMC to rally and get the Moass, or do you think the broad markets come back and AMC just well outperforms? Because even what we've seen over the last week, AMC stock was up over 30%, whereas the S&P was only up about 7% only a couple days ago. So let me know your thoughts on that. Like the video, subscribe to the channel if you guys want to come trade with me live in real time. The most important week of 2022 is right now. Link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.